A dramatic situation is unfolding in the world of electric vehicles. Tesla shares are experiencing an unprecedented decline that may go down in history as the longest losing streak in recent years. Elon Musk's company, once considered the unstoppable leader of the electric vehicle industry, is now facing serious challenges, according to its latest financial reports. Tesla shares have fallen a shocking 53% since the beginning of the year. A particularly alarming signal was the 7% drop in one day in mid-March. The company's market capitalization has fallen from $770 billion to $635 billion, causing serious concern among investors. The European market, traditionally important for Tesla, is showing particularly alarming results. In Germany, sales fell by almost 70% in January-February, and France and other EU countries have seen significant declines in market share. The decline is exacerbated by several factors: the Trump administration's trade tariffs, Musk's political statements, and growing competition from European and Chinese manufacturers. The Royal Bank of Canada has lowered its target price for Tesla shares from $220 to $175, expressing concern about competition in the Chinese and European markets, as well as Musk's excessive passion for social media. Even the U.S. Commerce Secretary's statement about his intention to buy Tesla shares backfired, with the stock further falling. Experts are divided on the reasons for the decline. Some believe it is the result of unfounded panic, while others point to the company's structural problems. A difficult economic environment, rising commodity prices, and political contradictions have created a perfect storm for Tesla. Of particular concern is the influence of Elon Musk's personality on the company's business. His controversial political statements and social media activity are increasingly perceived by investors as a risk factor. Combined with increasing competition and economic difficulties, this calls into question Tesla's long-term prospects in the global electric vehicle market. Elon Musk has long been at the center of political debate, and the Commerce Secretary's recent statement about the risk of investing in Tesla dealt a serious blow to the company, after which Tesla shares immediately fell by 6%, exacerbating the decline caused by the trade war between the U.S. and China. Trump's policy of protecting American manufacturing through additional tariffs on Europe, Canada, and China has increased Tesla's costs in these markets. The retaliatory tariffs have driven up the company's cost of sales outside the U.S. Tesla, which has been hit by tariffs in both production and sales, is now struggling with uncertainty. According to Electroc, Tesla's sales in Germany in January fell 70% from a year earlier. In Europe's largest car market, Tesla has lost significant market share. Model 3 and Model Y deliveries are well below expectations. French and Italian media report that Musk's stance and Twitter controversies are creating a negative image among European consumers, who are particularly sensitive to environmental issues. CBS News notes that Tesla's falling sales in Europe are out of step with the overall trend of electric vehicles. Other brands are rising, while Tesla is falling. Investors are concerned about Musk's speeches and the lack of clarity in the company's strategy. The U.S. Commerce Secretary said Musk's political moves are creating a risk for the company's shares. Corporate governance at Tesla needs more clarity. Musk's personal decisions are overshadowing the company, the secretary said, according to Axios. These words have accelerated the sales wave. Tesla shares lost $70 billion in capitalization between March 14th and 16th. The figures confirm the decline in Tesla sales in major countries. The decline in the German market, reaching 70%, is seriously affecting the company's performance on a European scale. Tesla has recently been experiencing an unprecedented crisis, which experts call the most serious in the company's history. The shares of the electric car manufacturer have fallen by 53%, causing concern among investors. Competition in the European market is getting tougher. Chinese manufacturers, BYD and NIO, are actively entering the EU market. Tesla's Giga Berlin plant is facing problems, lagging behind plans, labor conflicts, and regulatory difficulties. Reputational risks are growing due to Elon Musk's behavior. His passion for Twitter and conflicts with European leaders are not strengthening the company's position. The departure of top managers raises questions about the stability of management. Financial analysts note the overvaluation of Tesla shares, based more on growth potential than on actual performance. Now that competitors are ramping up production, Tesla's monopoly position is being challenged. The problems are intensifying with supply chain disruptions and rising raw material prices. The high cost of Tesla models is becoming less attractive to consumers, especially given the incentives for other manufacturers. The U.S. Commerce Secretary's statement on Tesla shares has drawn criticism as unwarranted interference in the market. Experts believe that advice from officials could backfire. Investors are watching Tesla's supply and revenue figures. If the downturn in Europe continues, global sales targets will be unattainable. The company may redirect capacity to Asia, but competition is growing there too. Tesla, which has positioned itself as a tech company, is facing market reality. The question is whether it can adapt and restore investor confidence. In recent times, Tesla has been experiencing unprecedented turbulence. The stock has fallen 53% since the beginning of the year, forcing investors and analysts to closely monitor every move of the company and its leader, Elon Musk. In Europe, Tesla sales have fallen sharply despite the overall growth of the electric vehicle market. In Germany, the company has faced problems with brand perception. Consumers consider Tesla cars expensive and poorly provided with service support. Attempts to reduce prices have not had the desired effect. This has led to a decline in profitability, and falling stock prices are being exacerbated by the Trump administration's tariff measures, which are limiting Tesla's export opportunities. Pressure on the company includes competition from European and Chinese manufacturers, economic problems, and Musk's controversial social media activity. His tense relations with European leaders are negatively affecting the perception of the brand. Some analysts predict that the stock will continue to fall. Speculators are selling the stock short, creating additional pressure. High volatility is scaring off institutional investors. However, Elon Musk has repeatedly pulled the company out of difficult situations. Possible technological breakthroughs, including new developments in the field of batteries or the launch of Cybertruck, could change the situation. The current crisis is characterized by a multitude of negative factors. The coming months will be decisive for Tesla. Financial results will show how seriously the company has suffered. If negative trends continue, especially in the Chinese market, this could trigger a new wave of sell-offs in the stock. In today's issue, we look at the dramatic fall of the once unshakable tech giant Tesla. The company's shares have fallen an unprecedented 53% since the beginning of the year, leading to the loss of hundreds of billions of dollars in market capitalization. What happened to the company that was considered a symbol of long-term growth? Institutional investors are selling off shares en masse, and giants like Royal Bank of Canada and Morgan Stanley are downgrading the company's ratings. Even the U.S. Secretary of Commerce is advising people to stay away from the stock. The situation is being exacerbated by a variety of factors. Tariffs imposed under the Trump administration have significantly increased Tesla's logistics and supply chain costs. But the situation is particularly alarming in the European market. In Germany, sales have fallen by a shocking 70%. Significant losses are being observed in the French market. The company's reputation is also suffering from Elon Musk's political activity. His contradictory statements and involvement in various political debates have cooled European consumers' attitudes towards the brand. Amid a general economic downturn, this is creating an extremely unfavorable situation for the company. Tesla faces serious challenges. The company needs to restore consumer confidence in Europe, adapt to the trade war between the U.S. and China, and find a way to minimize the negative impact of Musk's political rhetoric on business. Will Tesla be able to overcome these difficulties and return to its former glory, or are we witnessing the fall of another tech giant? Time will tell, but one thing is clear: the company faces a serious fight to restore its position. If you are interested in this topic, subscribe to the channel, put likes, and share your opinion